Markets are retreating from the gains of the last few days, last couple of weeks. So we're going to jump right in, take a look at what is going on right now. So currently it is 1:48 Eastern Standard Time, and the Dow is down 0.71, not too bad, 225 points. S&P down 1.23, Nasdaq down 2.11. And again, watch the market into the close. We will gauge investor sentiment watching how the markets close today. Big story is Snapchat down about 40-something% on poor earnings. Other tech companies are out with poor earnings, and the PPI did not look good, showing further downside. Big earnings are yet to come, and the Fed meeting is next week, where it's almost certain they're going to raise interest rates by 75 basis points, potentially 100. They did not telegraph anything today so far. They do not like to surprise the markets, as the markets like certainty. They do not like uncertainty. So the Fed is not one to surprise markets right now, as volatile as they are and subject to headline risk, meaning any kind of news can make the markets go up or go down substantially. So I would expect unless the Fed comes out Monday and telegraphs a 100 basis point move, I would expect 75 basis points. They have to get inflation under control. Inflation has not plateaued. Bond yields are down today. So mortgage rates will drop a little bit. That could spur a little bit of buying frenzy if rates drop a little bit. This is the lowest level on bonds in a long time. And why is that? So it's because the ECB raised interest rates, recessionary fears, and the PPI print that came out showing manufacturing slowing down. So as of around 11:50 Eastern Time today, the yield on the 10-year Treasury note was down sharply, more than the 2-week low of 2.79%, furthering Thursday's night plunge to the worst single-day decline in March 2020. Why are yields down? Because capital is flowing into the safety trade ahead of a recession, with heightened recession fears. The gains in the market the last few weeks. So investors are taking profits. They're putting it into safe haven, which is bonds, treasuries, the dollar, things like that, gold. Those are the things that when they sell risk assets like stocks, equities, they're going to put it into the safer assets like treasuries, the dollar, gold, things like that. Of course, real estate is the ultimate store of value, safe haven asset. Bitcoin is not. Bitcoin is a risk asset. It is not a safe haven. It has not decoupled from risk assets yet, and it probably won't anytime soon. We'll talk about that in a minute, but that is what it is. It's not an opinion. It's just fact. It is a risk asset. It is the riskiest of risk assets, Bitcoin and crypto. I know they're different. A lot of people think Bitcoin is a hedge against inflation, store of value, all that. Bitcoin is a risk asset, and it's on the riskiest scale of risk assets. And that's why the big dollars go into treasuries and bonds for 2.7% yields versus going into something like Bitcoin. There's a reason that's happening. And the reason that is happening is the yield on the 2-year Treasury note was last seen around 2.9% above the 10-year, continuing the inversion, yield curve inversion. You've heard a lot about the 2-year, 10-year yield curve inversion. So yield curve inversions, when shorter-term government bonds have a higher yield than longer-term ones, despite carrying lower risk, are often viewed by the market as signs that a recession is imminent. So recession fears are getting more concerning to large investors. Risk sentiment was further dampened. Risk meaning, equities, Bitcoin, crypto, those are risk assets. Risk sentiment was further dampened after a European central bank on Thursday announced a 50 basis point rate hike above its own prior guidance, and marking its first hike in 11 years. As concerns about runaway inflation outweighed fears of slowing growth induced by Russia's war in Ukraine. All eyes will turn next week to the Federal Reserve, with markets assessing what they're going to do. So that is what's going on. That's why yield on the 10-year and 30-year is down right now, and yield on the 2-year is up, because investors are expecting more severe recession. We're already in a technical recession. We're going to find that out here next week when that number comes out. But the smart money, if you will, already knows that we're in a recession. We've been in one. It's going to get worse by the end of the year. It's going to continue into next year, and it's going to take 18 to 24 months to get inflation under control. And that is if everything stays as it is. We don't see any escalations with the war in Ukraine and things like that. So let's take a look at what's going on. This is Bitcoin on the daily. Let's take a look at the hourly here. And you can see it's kind of unwinding some of these moves here lately. Nice bounces though, right? So crypto, Bitcoin have had some really nice bounces. So have some of the stocks, Bitcoin has bounced, from the range low here to the range high, 38%. Nice little bear market rally, bear market bounce right there. The last one was over here and range low to range high, 27%. So this was a nice bounce, much more aggressive than the last one. And Ethereum has had a really nice bounce as well. Ethereum from range low here during this recent range to range high. And of course, you have the merge in play, buy the rumor, sell the news, 85% bounce. The lower these prices go, the higher they will bounce. And a couple of other ones like Avalanche had a nice little bounce. Matic had a really big one with the news of Disney coming in on the Polygon network, 90% in Avalanche, Solana. So these are the ranges where you can have a lot of fun when they hit the lower levels, 81%. Again, the lower prices go, the higher they're going to bounce. Matic was a big winner here over the last couple of weeks in this range with a 200% bounce. Gotta love that, right? So these are, where you can make some nice little trades, have some fun while stuff is ranging. Let's take a look at Bitcoin on the daily here. And I believe has probably lost the 50-day moving average that it had claimed recently, still just a little bit above it. So right now price is still hovering a little bit above that 50-day moving average and kind of bouncing and testing that 200-week moving average that is ever so important for Bitcoin, 22,780. So let's take a look at some stuff here in the history of Bitcoin in terms of what you can expect, because a lot of people are wanting to call this a bottom and are expecting price to jump back to 30,000 and put a new all-time high in. The Fed has not even started yet. They're getting ready to raise rates again. Last time the Fed raised rates was the 15th right here. So the CPI print came out on the 10th. This was the 5 days ahead or 4 or 5 days ahead of the Fed raising rates. So it basically dropped, just to give some expectations, on the lower level, it dropped 30% ahead of the last time the Fed raised rates. So if the markets unwind from here and drop 30% ahead of the next Fed print, puts it right down in that $15,000, $16,000 range like we've been talking about. So that's the expectation right now, is that prices will continue to unwind, to play around over the weekend. But as we get closer to Monday, the markets will start to unwind into that 75 basis point rate hike. I know a lot of people said it's all priced in. That is not priced in, neither is recession and the further work that the Fed has to do, because they've got to get recession under control, or inflation under control. The only way to do that is to put the economy in a recession. You have to slow it down, right? That's what a recession is, slowing growth. It's not a huge deal. Deep recession is job loss, companies closing, things like that. But like we've been talking about, these bear market rallies can be, quite aggressive, right? The first one was about 10%. Then as it goes and the range, lows drop deeper, the bounces to the range highs are higher. That's 25% rally right there. This is the Do Kwon era. And that was about a 46% bump, bear market rally right here, 26% in the last range. And then again, we saw a 38%, I believe it was, bounce here. Yeah, 35%. So let's go look at what has happened in the past. And even last year at this time, nice little rallies off the low, range low, initial drop, 40% there. And there were a couple of bounces, in between in the 30s and 40s before price went on. But again, this was a different ball game. This is just not going to happen right now. We're not going to see that. We are going to continue to either consolidate to the lower levels of the range when the Fed raises rates, or we're going to break that last 17.9, 17.6 low and go down and test some new lows down to that 15,000, 14.5, 15, $16,000 level like we're talking about. But here's 2018. And let's look at this first initial reaction. That was a 52% bounce off that initial low. And then there was another bounce at 39%. And then another one here at 42%. Then another one here at 90%. That's a 90% bounce. When Bitcoin dropped all the way to 5,800, came back to 11,000, and then dropped back down again. And let's see what this bounce was. Bear market rallies are fun, right? 54%. You can make a lot of money in these if you get it right. Not easy to do, right? Because, when you're down here, everybody's calling for new lows. And then when you're up here, everybody's calling for new highs. So it gets tricky for people to kind of time these. That's a 46%. And you can see, the bounces just get less volatile, less violent, 23%, before you ultimately, everybody just gives up and goes away, right? So just kind of what happens. This is how value is extracted from the market. Drops down, everybody thinks it's, going to all-time lows, and it's just, market's over. Then it bounces, gets everybody excited, they buy back in. Then it drops, they sell, they buy back in, they sell, they buy back in, when it should be the other way around, right? You should be buying here, selling here, buying here, selling here. So fast forward to today, same thing, right? Price drops, everybody, a couple people panic, think, when it gets down here, thinks market's going to zero, so they sell. Market rallies, they buy back in, drops on them, they sell, rallies, they buy back in. Same thing all the way down, right? So where does this come from? Let's take a look at the Nasdaq, because that's the closest thing to crypto. Same thing, right? Market drops, everybody's scared, bounces, gets them back in, drops, bounces, gets them back in, drops, bounces, gets them back in, drops, and just wears them out, right? And grinds them out to the bottom. Let's take a look at the last time something like that happened. This is the pandemic, a little bit different, but let's go back to 2018, 2019, when the Fed was raising rates and tightening. Same thing right here. As the market worked its way down, the Fed pivoted back off to the races. The Fed is not going to pivot right now, not anytime soon. Their credibility is on the line. They have to get inflation under control. That's their number one job. If they don't do that, they will go down as the worst Fed in history. And they don't want that, right? So their credibility and their reputation's at stake. But here's 2008 and 9, Nasdaq, the way it kind of works, and that was the banking crisis, but more consistent with what we're dealing with right now in terms of a slow unwinding and how long these things can take with the bounces is the 2001 dot-com bust. That's probably the most relevant unwinding into a bear market, comparable to where we're at now. And if you look at this took basically from peak to bottom about 373 days for the Nasdaq to unwind that. So that's an interesting coincidence there, because that is about the same amount of days it takes for Bitcoin to unwind a bull market. So let's copy this right here. I want to move this forward right over here, and we'll kind of, compare it to what's been going on. I want to copy that pattern. It's not letting me copy just the pattern. I want to try to copy just that pattern. There we go, copy. We're going to move this over, and we're going to take a look at Bitcoin, and we're going to put that right here and just kind of see what we get. Pull that down right there, and you can kind of see how these things tend to play out. So that's the Nasdaq over a year compared to what Bitcoin looks like right now. And of course, you can't really compare everything. It's not apples to apples, but let's kind of pull this thing down. And you can play with these things and make them fit, not fit, whatever you want to do, narratives, things like that. But, kind of similar, right? So when you look at Nasdaq compared to Bitcoin now, a lot of this price action and this drop looks very similar. So we said that this took basically 370 something days to happen from peak to trough, right? So right now, Bitcoin is 300. Well, right now, Bitcoin is, 255 days in. So 365 days for a year puts you out to November 2022. So yeah, obviously November was the peak, so a year is going to be November. Duh. So it could take a year for that to kind of unwind and work its way back down there. And if you look at previous Bitcoin cycles, peak to trough, let's take a look at this one. Back in December 2017, 364 days to get to a bottom. Let's go back and we'll look at that in a minute. That's the hash ribbon indicator that we've been watching, showing minor capitulation. Let's look at 2014 and look at the time frame there. And that one's not as easy to pick, but still about 400 days. So right in that time frame. So pretty consistent amount of time it takes Bitcoin to hit bottoms. And of course, this was an irregular correction. So, a lot of people are calling this the peak. So if that was the peak, obviously April, we've already gone through that, right? So we've already seen a year transpire there. So obviously this was the top of the market. I know Pi cycle indicator nails it here, but this was the all-time high. So from there, that's when the bull market really, or bear market began. A lot of people say it began over here, but it could have, and that's the irregular correction and everything. But in any event, we're in that cycle. And the 1 year, to unwind to get to a bottom, who knows? I mean, a lot can happen in the next 6 months with the economy, with interest rates, things like that. Let's take a look at the hash ribbons indicator. And, this is just the reality of the situation the market's in right now, right? You can see that the miners are still capitulating. This is still growing. So that indicates you have not reached a bottom yet. We're not getting close to a buy signal in terms of the hash ribbon. And you can see how that kind of works, is that, widens as it goes lower, levels off at the bottom. It starts to print consistent green dots to give you that buy signal. Obviously, the bottom was reached well ahead of that before it started printing those solid green signals. And as we look at over here with the same kind of thing, there could be an argument that based on this hash ribbon that the bottom could be being put in here, similar to what we saw, back in this area here. If you kind of look at how that plays out, the bottom started to get put in right around this area as it started to turn green and get some green prints. This is a little bit different of a pattern going on here than what was happening here. That, I would argue that this area here is kind of where we're at now, and then you can see another decline from there. So if that's the case, let's take a look at what that looks like. If the hash ribbon signal is kind of where we're at in this area right in here, markets dropped, probably, another 15-20% from there, from that ultimate low. So if you look at where that is from here and say another 15 to 20%, so that puts you back down around the 19,000 range of the lows there. So there is some, argument that the bottom could be put in somewhere around that 17 to 18,000 range, maybe 19,000 could be a potential bottom if Bitcoin can hold up against the next rate hike. So we talked about that on the last video. That's the real key, the real test, right? If Bitcoin can hold this range after the next rate hike, then, there's some argument for, this being, potentially a bottom for this range right now, and a, longer, major market structural bottom being put in for the next bull market when it does resume. So, that's kind of what I'm looking at in the charts right now as far as Bitcoin and crypto go. Traditional markets, we talked about those. They're just kind of working their way through until the next Fed move. So we should be looking at, maybe 5 to 10% down in the markets, over the next week or so. Unless the Fed does something really crazy and something else, surprising comes out of the woodwork. And, why did I say Bitcoin is not a store of value? Why it's not a flight to safety trade, hedge against inflation, all that? Why is it a risk asset? Because it's the risky of all assets right now, right? Because it can drop half of its value overnight. It can go up twice as much overnight. So it has exponential upside, but it has exponential downside versus a consistent, what is seen as a safe haven store of value, like a bond, like the dollar, like gold over time. They fluctuate, but not as much. Gold's not going to lose half of its value in 24 hours. The dollar is not going to lose half of its value in 24 hours. Government bonds, they're fixed, return instruments. So that's a safety trade, right? That's like putting your money in the bank, like a money market, a CD, things like that. And it's backed by the US government, which is, and the US dollar, which is the, reserve currency of the world. And I know that's trying to be undermined and all that, but at the end of the day, it is what it is. It's not going anywhere anytime soon because we are the largest economy. We are ruled by law. I know it's, kind of crazy times right now and polarizing times right now, but at the end of the day, we are the most trusted nation on earth when it comes to financial stability. Even with all the issues that are going on, we are still the most financially stable economy in the world. And, the reserve asset. So that's why, and Bitcoin is a technology, and technologies, can be replaced. They can break, they can become obsolete. There's a lot of issues around technologies. Bitcoin, the reality of Bitcoin is at some point the mining will be done. And the only incentive to maintain the network are fees. That probably is not going to work out. So at some point, the network itself could be at risk because there's just not enough money in maintaining the network for transaction fees. There's debate on both sides of that. That's just something to research. That's a long way out, but it's something to think about. So that's something that investors know that they're looking at, and they know that the life cycle of Bitcoin could be short-lived. may not, I mean, our lifetime, we may not see it in my lifetime. I'm 55 now and I'm not a boomer. Thank you very much. But those are the things that, investors are looking at and thinking about when they think about investing in cryptos, things like that. They are exponential assets. You can make a great, return on that investment. They've outperformed everything else over the last, 10 years since they've been in existence. But, if you compare 10 years of other assets, starting them from zero, this is probably about the same in terms, there are some other cases that come close, not really the same, but stocks don't start at zero, right? Stocks start at whatever they're issued at. So it's not really a fair comparison, but nothing else is grown 10,000% like, Bitcoin and some of these cryptos have. So pretty interesting exponential gains there. But the problem with that is the exponential gains are also equaled out with exponential downside and loss. So that's the problem with, not problem, but that's the investment ROI, risk reward ratio that has to be calculated. And that's why sovereign wealth funds, pension funds, life insurance companies, huge capital cannot come into that space yet. It's too volatile. It's too dangerous. There's too much risk. They can allocate a little bit, once we get some regulation and clarity. They're not going to put big dollars into it anytime soon until the space stabilizes. There's more clarity and certainty around that. And they would rather earn, safer yield, predictable yields and safer instruments because it's big dollars. When you're moving hundreds of billions to trillions of dollars, you don't need a huge return to maintain and sustain that wealth. So that's the reason that Bitcoin is a risk asset. It's not a reserve currency. It's not money. And it's not a safe haven asset. It's it's not a risk off asset. It's a risk on asset and a risk on trade. And there's positives and negatives to that. And it just, flows with the capital in the market in and out of those assets. So as long as you understand that, how capital flows in the markets and how risk works, then, it kind of helps with your investing thesis as you go along. So these are the things I'm looking at. We'll see what happens over the weekend. Big thing to watch is how the markets react and respond going into the close. What is, if they're selling off into the close, that tells you what investors are setting up for next week, getting ahead of the Fed. So if we have more downside going into the close, let's take a real quick peek here before I sign off. Markets are kind of holding right now at those, levels that we started the video out at. So we'll just see how it goes into the end of the day. If markets, gain towards the end of the day, then, we'll see what that looks like on Monday going into the Fed. But until we get news from the Fed and, we see how the markets react to that and how Bitcoin reacts to this level, we will get our answers next week. So that's what I'm looking at. I hope you have a great weekend. I'll see you on the next video.